Hey YouTube, what's happening? Chris here. Wanted to bring you something that was on my heart today. I believe this is one of the most important videos that I can get out to each and every one of you, and I hope that you take it seriously. It's very important that we go over these things now, especially for the future bull run that will happen. And I want each and every one of you to be prepared. And what we're going to talk about today, I'm reading in my book. It's called Bear Market Game Plan, Strategies for Success in Choppy Markets. And I'm going to share a little bit of this with you, and I'm going to give you my opinion on it. And this is stuff that a lot of people probably aren't reading, and I do really sincerely want to bring it to you. So if you could, hit the like, subscribe, notification bell. I'm trying for 100 likes on this video. Can't do it without you guys, and you're just killing it for me. And if you like these type of videos where I'm just reading out of my books and helping you guys learn different things about trading and charting and emotions. So what we're going to be going over today is the actual emotions of a bull market and a bear market, but we're going to focus more so on the bear market. And what a lot of people don't understand is you can make just as much money in a bear market as you can a bull market, and that's the beauty of learning how to trade and being able to go short. All you're looking for as a trader, if you know what you're doing, is you're looking for volatility, and that's the cryptocurrency market, better than any market on the face of the earth. I read some of these books and they talk about, man, a 20% gain in a year, and people are going crazy over that. And heck, Bitcoin can move 20% in a day. And if you can capitalize on that, I mean, it can be life-changing opportunities in this space. So that's why I want to help people learn how to trade, is because it doesn't matter if crypto stayed in a bear market. All we need is volatility. If it's going up and down in a channel bouncing around, as long as there's volatility. But there's going to be another bull market. And what you're going to have to ask yourself is, did you study? Are you prepared for the bull market that's coming? Because many of us weren't prepared for the bear market that happened. And I really started studying over the past year. Once we had that first significant drop in the market after our moonshot, I was like, all right, I can't ever let this happen again. And I really started studying and working hard and reading as much as I could. And I really started digging into bear markets. And many millionaires are made in bear markets when the prices get so low and they're so oversold. And then the big dogs come in and swoop in and they buy them up, and the volume goes up, and then all the little guys jump on and ride their coattails. If you're able to build a portfolio near the bottom of a bear market, and you're able to hodl those, which then it's a great time to hodl, guys, in a bull market. Hodling in a bear market is not the thing to do. Hodling in a bull market is great, and especially if you're able to buy the bottom. You're able to hold those coins all the way up there. Now, I would want to be trading. I would take advantage of when we have huge spikes, sell off, wait for it to pull back, and then accumulate coins. I think that's the best way to do it. But if you're able to just hold on even to your coins, if you could accumulate near the bottom of a bear market, it could be life-changing, especially in the cryptocurrency space. We saw Bitcoin go from $800 up to $20,000. It's happened. Who's to say that this next run won't take us to $50,000, and we have a retracement to the top of what our last high was, around $20,000? Like how we're down around 3,000 or whatever now, and it's just that stair step, higher highs and higher lows taking place, coming in. And I'm seeing the big picture, guys, and we're so early into this. And if you're able to get into some good companies, it really could be life-changing. But we need to study, and we need to learn, and we need to understand these things so that we can be prepared for these things. And that's what I want to do. I want to bring as many people along with me as possible. I know so many people were hurt emotionally, everything, when the market crashed. We all thought it was just going to be some type of a pullback or a throwback, and it turned into a bear market. Knowing what I know now, I would have known to get out even earlier. If you drop more than 20% I'd say in traditional markets it's 20, but in crypto I'd say more like 35, 40. If you drop that much, then you're going to be in a bear market and you're going to be heading down. And I know that now. And excuse me, guys, I gotta grab a sip of water here. I'm still not feeling the best. But I'll give you my honest take on this. Since I go long and I go short, I enjoy shorting. I feel more comfortable, and maybe it's just because I've learned all this during this bear market. I feel more comfortable shorting than I do longing. And in my opinion, I feel like and it's just my opinion, I feel like price naturally wants to drop because you have to have that demand to buy this stock. Like people have to come in and say, I want this, or it just naturally is gonna be coming down. And I just feel like gravity's down, and it's easier a lot of the times when I see a huge spike up in our RSIs at 95 to say, hey, I'm jumping in a short and I'm gonna ride this down. And it seems like that's been better than longing. And maybe things are gonna change when I'm really trading in a bull market. You know, I still play reactions to where I'm going long on things and I'm going short on things back and forth. But obviously we've done more shorting in this bear market. But it's interesting how I really do. I feel more comfortable shorting, and I feel more comfortable in a bear market because we've been in one for this long than I would a bull market. But, you know, it's a learning experience. And I just hope that throughout this bear market, you guys took advantage of it. You studied as hard as you could, and you know what to do for this upcoming bull market when it happens. You know, study bull market specifically, study bear market specifically, and that's why, like this book I'm reading, do Bear Market Game Plan, Strategies for Success in Choppy Markets. I attacked this bear market head on. I said, I'm going after this. You know, I got to learn this. If I'm going to be in a bear market, I better know what the heck a bear market is. So I have this book that I'm going to read to you guys, like a page or so. It won't take too long. And then in terms of bear markets, I have Bear Market Investment Strategies. That's about a 20-year-old book. I'm just looking over here. Panics and Crashes and How to Make Profits Off Them. Life-Changing Profits. I did the Elliott Wave Explained. Getting Started in Chart Patterns. Rule the Freaking Market. Japanese Candlestick Charting Book. 7 Chart Patterns That Consistently Make Money. We got the Chart Patterns book by Thomas Bulkowski. We have Riding the Bear, and that's all about bear markets. You know, guys, I just had to go head on with it and say, I'm going to learn it. And that's my thoughts on it. You know, fool me once, then whatever. Yeah, that's the market. I'm glad. It was a great learning experience. It was phenomenal. I'm so glad I went through this bear market, but you ain't going to fool me twice. And that's why I'm a more conservative trader with you all. And say, hey, just, you know, calm down. Just don't FOMO into anything, because I've been there before and I don't want you to make the same mistakes. So we're going to read this real quick. We're going to get into it. And just listen to this, and you see if this is anything that correlates with the cryptocurrency space, because I sure think it does. The year 2000 was memorable, especially for anyone attempting to navigate the stock market. As the year began, most of us were poised and waiting for the millennium bug to crash computers all over the world and have a financial meltdown. Instead, as the markets turned bearish and stock prices collapsed, many investors felt the financial meltdown as they witnessed many of the gains made over the past few years wiped out in a matter of months. This was easily one of the most volatile periods in the history of the stock market. The explosive growth of the internet and a raging bull market has brought millions of new investors into the market over the past decade. Investors grew accustomed to 20% plus returns and lost sight of the fact that markets do not always go up. In fact, many investors borrowed heavily and poured every cent into the market, figuring an almost certain windfall would easily cover the interest. Now that the market has changed so dramatically, many investors are struggling with the fact that what worked so well for them during the past decade simply is not going to work anymore. Unwilling to admit that things had changed, they continue to apply their bullish strategies, only to find themselves digging an even deeper financial hole. Many have become so afraid of losing more money that they simply pull out of the market completely. Markets never go up forever, and investors need to learn to recognize the major market trends and adjust their strategies accordingly. The natural tendency of most investors is to have a bullish bias, which is the single biggest weakness when the market turns bearish. As we find ourselves faced with circumstances that are much more challenging, our needs for knowledge become greater. This is one of the things that prompted the writing of this book, Bear Market Game Plan, Strategies for Success in Choppy Markets, as it is exactly what investors need to weather the storm, a simple plan. This book is simply an introduction to strategies for surviving and even profiting in an extremely volatile market. I am confident it will give you some of the tools and resources needed to restore your confidence in investing in the markets and allow you to take control of your portfolio. Historically, bear markets do not last as long as bull markets, but they can leave an incredible imprint on the memories of those investors who have survived one. After a bear market, people never again look at investing in the stock market with the same level of confidence. Just as bear markets can be profitable to those applying the appropriate strategies, once the bear market ends, there are greater opportunities for those using the bullish investment techniques that they have learned or used in the past. In the basic investing seminars that my company teaches all over the world, we expose investors to both technical analysis and fundamental analysis. So that's where you have to have both. You got to put both together. Investors learn how to read charts and understand some of the most common technical indicators. We also introduce some basic strategies such as using covered calls to generate income and playing stock splits with options. You know, guys, and it goes on to say, what is a bear market anyways? I am sure that everyone has heard this term, but by definition, what does it really mean? We associate bear markets with falling stock prices. If we look at the last 7 months of the year 2000, we can see that some very dramatic things took place in the market. And this is showing basically exactly what happened with the cryptocurrency market, but ours just happened on such a faster scale, if that makes sense. Like, we're going through market cycles so much faster. Like, gold, to have the same retracement that Bitcoin's had after its all-time high, has taken whatever 30 or 40 years. Like, it's just crazy how fast this market moves. And that's what I want to share with you guys, that if you're able to control your emotions, that it doesn't matter if you're in a bull market, in a bear market. If you learn how to trade, you're going to be able to do anything. And that's what I'm here to help each and every one of you with. And that's just a little bit from like my bear market game plan. It goes over, you know, fear and greed, which is very important as well. I mean, that's the fear and greed, learning all about those emotions. I mean, listen to this, guys. It is very important that you understand there are many different emotions involved in investing. The two primary emotions are fear and greed. In a bull market, it's our overwhelming sense of greed that drives most of our investment decisions. We become confident. We think everything is going to go up. We have become part of the crowd and simply buying because everyone else is, and everyone seems to be making money no matter what he or she buys. So that's what we went through in cryptocurrency. In a bear market, fear takes over and you become controlled by that emotion. I think fear is a far more powerful emotion than greed for most investors. While greed gets us into the market when an opportunity may be minimal, fear will keep us out of the market when the opportunities are plentiful. Greed creates losses and fear creates lost opportunity. These emotional extremes are usually a signal that the market has hit either a top or a bottom. Fear is the emotion most often associated with bear markets. Most of us are afraid of losing money, and if you're not, you probably should be. The fear of losing money can be paralyzing. I have spoken with many people who have bought a stock and have held onto it for a long period of time. They are the classic buy and hold investors, and they have convinced themselves that they can ride out any downturn in the market. So there we go, hodlers in cryptocurrency. There is nothing wrong with investing for the long haul, but unfortunately in a bear market, many of those investments can decline 10, 20, 30, 40, or even as much as 90%. We've seen that, so that checks another box. If you're still holding one of these e-commerce stocks that were all the rage in 1999, you know the feeling. This bear market didn't stop with just the weak companies. Even the market leaders like Cisco, Intel, Dell, and Microsoft are now trading for much, much less than they were at the beginning of 2000. Most investors whose portfolios have been severely damaged in the last few years never took advantage of many warning signs that the market was changing. Greed also played a large part in this, as suddenly 100% gain was not enough, nor 200%. Let's hold out for 300%. When it becomes too easy to make money on your investments, complacency and greed take over. Of course, if you become successful in bear market strategies, greed can also play a role. In my experience, I've noticed that the best investors tend to be almost mechanical in their approach to investing. While one can never totally eliminate emotions from investing decisions, successful investors are able to minimize their impact. So that's what I wanted to bring to y'all. I'm sorry for keeping you so long, but this is the stuff that I'm reading in my books. I'm trying to share it with you. I sincerely, from the bottom of my heart, want to help each and every one of you. And if you can take something from these videos, I'm glad it helped you. So God bless you all. Take it into account. Study hard. Work hard. God bless.